Good morning, Trade Watch traders. What a fantastic week so far. And I hope everyone's excited. It is the festive season is here. I hope everyone's got some great plans ahead. And even if it is just to spend some time putting your feet up, reflecting on the year, thinking about the year to come. Certainly a strange world, but keep positive about it all, and particularly we create our own reality. So let's keep with that in mind, and hopefully everything goes to plan in a good reality. Anyway, so it is week ending 18th of December. I thought I'm just going to pop everything up in front of me here and just type it up so people can kind of keep an eye on what I'm talking about. I really want to bring you guys to the focus of, one good trade, and how do we sort of determine that one good trade. It doesn't mean taking just one trade, because that could be one bad trade. So I really want to emphasize when we're talking about the whole one market, one signal, one session, one trade, I want to just emphasize that as being one good trade. And I'm going to share a little bit of my own journey and with regard to my own trading and what I have been observing since September. I've been tracking, and what I've been able to do with that tracking as well. So let's get into it. So, coming up now. So this is obviously we're going on Christmas break as of tomorrow, but feel free to email me across the Christmas break. I do read my emails always, well, hopefully, and it might be a bit of a delay, but if there's anything urgent you need to connect with, be mindful. Christmas trading can be a little bit tricky, so be mindful that it might be a little bit different than the normal kind of trading behaviors, etc. Can be a little bit tricky, but take this time to reflect on your trading as well. Like, check out, think about what you did well over the last year. We can start all afresh into the new year. Start your new trading spreadsheet, or really make sure that the ones you've started within your trading Trade Watch and the Trader VA as well, that you have your accuracy going down. So I'm just going to quickly minimize this. And I just was bringing up yesterday in the Asia LTR. And I think this is important. People, if you maybe do a screenshot of it, this is just a daily report card that I have that I think is really important for traders to help them with their reflection. And you can use it obviously on a yearly basis as well. Looking at, were you often going into trading tilt, where you'd be within a heightened emotional state, whether that is extreme anxiety, anger, euphoria even. Don't forget, we can really head into the heightened emotional state with euphoria and sort of think we're invincible and start doing strange things as well. So it works on all sides of the scale. So you need to have a little look at what your triggers are for that, and really make sure that you're in control of your emotional state, and look at what sort of decisions that you're making and how you're making them, what you did well, what you could do better, what sort of leadership qualities you need to work on. Obviously, trading is all about self-leadership. How calm you've been, how disciplined, how responsible, how committed you've been, how patient you've been, how focused you've been, how organized you've been, and the list goes on and on. So that's why it's all about self-leadership. What do you need to do? What are you going to do going forward? Are you doing what's required? Are you filling out your statistics accurately? Are you filling out them in a complete nature? What do you need to do going forward? Make some changes going forward in the new year. Sometimes that fresh start is a good way to go, all right, what have I've not been doing just because I don't feel like it. Remember, as a trader, we need to do what we need to do, not what we feel like doing. Figure out there's probably some parallels in your life that you're, if you're unorganized in life, it might be, it is highly like you're unorganized in your trading. If you're, not got your routine going on, like why are you resisting getting into a routine? If you're finding it difficult just to simplify things and trade one signal, why is that? You've got to figure out what are you resisting. It's really, really important. Maybe you need to set better boundaries. I know a lot of people find that they get often distracted with their trading. That can come in many forms or fashion. And if you're constantly listening to other people's opinions and, there's a trader doing this and they're using this at ATM and they're using this target and they're using this entry signal, and all of a sudden you're jumping around chasing all these new fandangle things because you think that what you're doing is not that great and you better go and do what they're doing. You're jumping around like a jumping jack or whatever it is. You need to set boundaries and just really calm the farm, reduce and minimize everything that you're doing, and keep things nice and simple. Are you feeling doubt? And if so, why? What are you doubting? Do you doubt that you can do it? Are you doubting your method? Remember, as a trader, these are the things up here that you need to do. 3 things. If you've got doubt, you haven't done the work behind making sure you can identify your method in the market. And it doesn't mean that trading every single delta. It means identifying the high probability deltas in the market, in the environment that's going to give the right returns. Are you expecting too much out of the particular market or the environment that you find yourself within? And then only by knowing your method will you know whether it works. When you know it works, you will build the confidence to do what you need to do in an emotional context. So anyway, you guys can screenshot this. Obviously the market's going to do what it's going to do regardless of how it's how we interact with that and how are we getting in our own way for success. So guys, I highly recommend you look at yourself big and hard, because it is worth it when you do the work. Remember, we want the market to come to us and not to be forcing trades and doing things along those lines. So I've got, again, so that's that. So into the new year, it's important to constantly look at those sort of things, and why not now's no better time than now to make sure that you are doing what's required, and make sure you start those right behaviors into the new year, because it's all about behavior. Okay, so I'm going to reflect back on this one good trade, because I have been doing a lot of work myself within my stats, and I've actually got a trade going on the screen at the moment, which is just happened to be the perfect timing. It's at a daily swing trigger. So I took it in sim, and I'm going to reflect on that in a moment with you guys. So what I've done with my statistics, and I'll go into those so you guys can understand what, if you're not in my trading room, you can understand what I've been looking at. So one moment. So here's my statistics for this year. I'm just going to put a filter on there, which I've got loaded, and it's for the large triggers. So these are all my trades that I've taken that are leading into a larger chart swing trigger. So initially I was just taking my normal targets of 15 ticks or 30. 30 was my larger target. And in some of those I was, being brave and took my larger targets. But this is going back since September. You can see early September, and I started. So there is quite a few of them. There's probably, I think there's 50 something now. And it doesn't mean I saw every single one, because it was only more that I noticed. And as I grew over time, so there is a count there of 51. As I grew over time, I became more confident with them, because what I noticed, and now I see them a lot better. What I noticed that at minimum, they were going 70, 80 ticks, so to speak. And some of them were going, you know, obviously quite either to the end of that leg, like the entire push. 120, here we go, I'll just expand that out again. So that went 120 to 280 ticks. Obviously there was a pullback in between there, so it went 120 and then in the first leg, and then it probably had a bit of an ABC and then continued it with its next push. 140, 140, or the 70 there is the smallest, more recently. 140, so on average, the 80, 80, 212, these one that trigger didn't even get hit. So there's, and then there's some larger ones more recently. And yesterday, I can't remember how that far that one went. I'll have to update that. Still haven't done that as yet. But let's just have a look. I'm just going to show you guys what I just happened to be when I woke up this morning, because I had on my chart, this blue dotted line is a trigger, so to speak. And so I'm in this trade now, just in sim. And I'll explain how I got into it. So there, what I was looking at, sorry, I know it's messy because it's got all my other stuff on there. I can probably take that off actually. This is 60-minute information. So what I had here on my chart was that where that blue dotted line is, it's not a swing trigger, so to speak, but look, that on the 5-minute chart is going to be a reasonable distance, even if it has a bit of momentum from that move. So I had that on there since yesterday, and I was watching it since yesterday in the market. So anyway, when I got up this morning, just a little while ago, I noticed I came in when this efficient candle was, obviously normally you want to get in before it. So obviously I wasn't here. So I'm just sort of testing it in sim. I was very tempted to go live, but I thought, no, I'm just going to test it in sim. So what I was, when I woke up, I had this efficient candle here closing over the brick wall, which was a part of an ABC pattern as well. Now, obviously I like to take any 101, like it would be in this efficient candle, or that was an ABC with efficiency, anything that I could have leading into that period of time, but obviously I wasn't even awake then, so that's fine. So when that candle closed, the risk to the failure was so big, and I watched it retracing back, and as it's retracing back, I thought I'll get in on this 50% here of the dominant candle. Could have actually gone a little bit further back, but anyway, I mean, obviously you never know that at the time. But what I looked at was, okay, that's a risk of virtually 80 ticks. And I thought, well, you know, I know that it can easily go 80 ticks. So I've got a 1-to-1 risk to reward, but I'm going to go bigger anyway. I just thought, let me just see how, now it seems that it's in sim. Seeing as though this is a daily swing trigger, this could go really far. So what I'm going to do now that the market has pulled back a bit further, we're an ABC, we're at a minute 30, we're up to a 76 there. I'm going to reduce my risk now. I could come under these brick walls or just under the stair step now. Pro start with the stair step. I'm just going to sit in here. Let's just see what happens. So I'm using a larger chart move with a 101 5-minute chart pattern. So I'm getting in on the 101 pattern usually, and what I wanted to explain to you guys anyway, but this just happened to set up anyway while I was here. So I thought I'll just take it, and you guys, I can show you firsthand what I'm doing. So let's just go back to my stats. So my stats have been showing me that, you know what, I can get a lot more out of these moves than my 15 and, you know, these targets that I've been getting. So I've just been trading normally since September on those trades, but tracking how far they go, how long it takes to hit the 80 tick target. Because I thought, well, minimum they're going to go 80 ticks. But some of these are going 280, 400. Some of them are taking like an hour and 90 minutes to get there, 80, 20 minutes, 40 minutes, 15 minutes to get there. But that's the end of the leg, actually, I think on there. Yeah, that's how far it takes to get to 80 ticks, or if it to the end of the push where I'm like tracking this larger move. Excuse me. I'm trying to push out my target a bit. I don't want to get out of this move too quickly. I just want to see how far we can take this. If I just got real brave and then just started getting to break even. Let's see. So effectively, I've got here too, can I use my 40 tick stop? Because I don't want to increase my, obviously today I did, because it's a, you know, much different market. I'm not that, and that's why I didn't take the trade. And the failure point is obviously the safest. Otherwise, I would have got stopped out if I took that live and had my 40 tick stop. So either, but I'm just, I need to explain this actually. Excuse me. So as I got in on a delay, the reason why I got in as the market retraced is because we had a delta outside the range. If someone was trading that efficient candle, they would have got, as a cover order, 2 ticks above the high, or that delta they would have got in. Now, so one thing we're looking at in my trading room, we call it the Johnny Freeman entry, is if that has gone past the normal entry and then retraces, you can get in later, like I did, and then have your risk, either, like, say, for example, if it allowed me to have my 40 tick risk behind the failure with that. But as you can see, I'm getting in later, and then all of a sudden I get profit quicker too. And I hopefully can have my risk, if I was able to wait a little bit later, but I didn't know it was going to retrace that far, I could have probably almost had to the failure if I had my stop, if I entered back here, but you don't know it's going to retrace that far back. And you may miss it if you're trying to get in too far away. But what you can do, this is what I did the other day when I was explaining it in my LTR, is that, say, for example, that's my 40 tick risk. I can have that where I want my stop loss, like so, and I'll just have my buy order sitting at the top of my box. That means if it comes down and picks me up like it would have popped my 40 tick risk behind the failure where I want my stop, and then I would have been already in I would have amount of profit already. So you can do it that way. You can be like, well, you know what? I only wanted to risk 40 ticks. If it comes back to that point, great, I'm in. If it doesn't, I don't, so that's just the risk you take then, obviously. But the thing is you're not risking any more than your normal risk. So 40 ticks, and what would have, if I entered down there, where would I have been at so far? I would have been already at nearly 160 ticks profit. So not bad little cookie crumbles. But yeah, you can time those, and that's just a way you can do it. You get, there's that opportunity to still get in because obviously, sure, the market's retracing to get you pick your buy order up back here, but if you were in since here, you would have had to sit through that entire retrace, and if I was trying to use my 40 tick stop, I wouldn't have made that. But being that it's at a larger chart swing trigger and all these brick walls, there's that case that happens like that too. So anyway, we'll come back to that. So I wanted to just say, this is how I decided then to change my tactic. Before, I was like struggling to get to 30 ticks as a larger target. And then through this data telling me that, you know what, if I sit around and wait for these type of trades to come up, I can get bigger bang for my buck. Now that's called, to me, one good trade. So sure, I'm going to have to wait around for it to be longer to happen. But most of these, even these ones here, even though they're losses, these green ones would have gone to my target, but it's just that my stop was too close. So I got stopped out, then it went to my target. This one, I got stopped out at my stop, and I re-entered, and it went to 55 ticks. I was obviously a little bit scared. 55 was big for me that days, but these show other trades that I didn't get in, but I observed. Sorry, these grey ones that I observed, or I missed it for some reason, and they went to they would have gone to my 80 tick target. So these ones here, this one never got to the swing trigger. If it's in red, it never got there. So 60-minute trigger never hit. These ones here too, then I had a day of 3 swing triggers, one on the seller side and one on the buyer side. One on the seller side, one on the buyer side. It came down, found support there at the swing trigger, headed up long to the other swing trigger on the high side, stopped me out there, came down and actually went through that short swing trigger. So, and that was a profit, and that obviously that was minus 69 between those two, and then I got 80. So I was still at the end of the day in positive territory. So as long as I can keep my risk relatively small and go for a minimum of 80 ticks, I'm going to be really fine. So as you can see, I've started to build up these with my confidence, took 70, 80, 127, 80. So rather than getting in there and out in every little snippety trade, and my risk to reward, say, for example, if I'm going for 15 ticks and my risk is 40, and I have a loss, it's going to take me a long time to get back that profit. But if now I'm trading at a positive risk to reward where my risk is at 40 and I'm got a 2-to-1 positive risk to reward. So like yesterday, I can bring up yesterday's chart to look at this trade going amazing here. So now I can just go into break even if I really want and just stay behind, say, the R1, behind that efficient candle. Now I've got nothing at risk. I mean, I could put price extensions up there, etc. But I'm just going to let it go. Let's just see what can happen. And where I didn't have the confidence to get into it live because it's not my session, and I just want to track these sorts of things first. And particularly was like that risk is too big. But if I can start doing this more often, where that's going to be nothing. Having that sort of a risk to stay out of the way for a retrace like this, or get in like that, if that signal triggered and then the market retraces, and I've only got 40 ticks risk on it, and I can do that sort of a move. That's beautiful. So anyway, we'll come back to that. So that's what I just wanted to say is that, like, oh yeah, so yesterday, I'll just bring up yesterday's charts, pretty easy to show you. So with my charts now, every time I have to show you this as well. So with my charts now, every time, so this is yesterday, I'll save then the larger chart as well. So there's my, so I can see what I was looking at on the larger chart. So here is, we had a complex retracement back through the MDI. We had support down here. Yesterday we didn't have any swing triggers initially. Then after this complex retracement, we had this MDI continuation. Now I told everyone, if I take any other trades outside of a swing trade, a 101 that's being backed by a larger chart swing trigger, and there was no larger chart swing triggers at this time, I'm only going for 11, maximum 15 ticks. I just said, look, I'm just going to avoid that. Don't even really care. It's not even worth my while. And what I was saying at the time was we need a lower low in the 60-minute chart, and then we would have a swing trigger on the high side. What happened? All of a sudden we had this crazy candle that just went boom down to the brick walls, failed there, gave us a lower low on the 60-minute chart, giving us a swing trigger on the high side. As soon as we had this, the market came up. We were just trading sideways here. So we had a little ABC forming to the high side. We had a delta outside the range of a candle. And I just put my order on, boom, there's my 80 ticks. I just managed to close that just a little bit under. But 80 ticks would have paid, I think it paid on that one, this one here, like a 2 ticks later. So I was a little bit concerned of this high, because as it came up to today's high, it was stalling, and I'm like, But anyway, that ended up going nearly 200 ticks, just under, and I think it ended up going a bit further. But very, very interesting. Very, very interesting. That why not sit around for that opportunity to happen than taking every single little trade where my risk to reward is out of balance and in the negative. Here, my risk to reward, my 40 tick stop was completely fine the whole time. The majority of the time it is, and that's where I'm tracking. So you can always watch the recording of that in the library. If people want to see those trades that I'm doing, they're all obviously in the library, in the competency library each week. So you can sort of see go check on those. So yeah, for anyone that's, doesn't want to take that one trade, why not it be? And we can do one or two trades. Like as you saw, I'm still taking virtually most of the time. There's one or two a day. There's two. There was three, but they were obviously, there was the one good one, but that's fine. It actually balanced itself out. Two that day, one that day. There was three that day, but obviously they weren't always in my session time. That was in the US close, but I'm usually up around. I'm always up around that time, not usually, but I'm not always looking at it because I'm not trading it, obviously. So yeah, interesting, but mostly there's one a day anyway. So why not just sit here? Oh, that's right. Yeah, sorry. I just wanted to wrap it off. Let's go back and have a look what's going on at this trade here. So, I mean, look at that. Nearly $3 grand. I mean, I show it my 3 contracts. But that's a pretty fun morning. Take the day off for sure. So no, but so that's a really good example that came in. But I just wanted to say to you guys, something about. Oh yeah. So and also another thing I noticed from my stats from my other trades is that when I take this filter off, I'm going through, but what I noticed that a lot of these trades that were losses, say, any of my losing trades, was that they were against the swing trigger direction. So now I won't take a trade that's against the swing trigger direction, if there is one, number one. And number two, if there are no swing triggers, I'll just take a little trade of 11 ticks or 15 ticks, or just even avoid it, not even take it at all, and just sit there and wait for those larger chart moves. So that is what I'm talking about when I say one good trade. So hopefully that gives you guys a little bit of something to think about over the new year. And I thought it was really, really timely. So I see, and what I've got to practice now with these larger chart moves is how can I exit? I don't want to get in the way. I either just leave my target up here. I could maybe bring it just my stop. But the thing is, I don't want to get, there's my, I might just go to 80 ticks. There's 80 ticks. In worst case scenario, I'm out at my 80 because I don't want to kind of get in the way of as the market retraces. So I might use that as a point. Worst case scenario, I'm pretty happy with my 80 ticks. And that should be if the market does retrace, which it's going to at some stage. Where's it gone so far? From my entry. So far, it's gone over 200 ticks. Okay. Now, I'm going to get into each individual trader one moment. Wow, guys, I just want to share this trade with you guys. I really wish I took it live now. I don't often trade in Sim, but look at that. It's up at 3,600. Quite a nice little, but obviously we're up at a 100% level. So it's probably going to find a bit of resistance up there. It's obviously 100% is another peak. Oh. But look, I'm just going to sit there. I'm just going to practice sitting there because that's something different for me. So I need to practice that and just look again. If I could have had an 80 tick target. That's if I walk away with that, I'll still be very happy. And again, it's only Sim, but we've got that peak there from yesterday's US close. So let's see how that goes. So I just want to see how I can sit in these trades. I mean, and I can bring, obviously there will be a retracement at some stage soon, and I could bring once I get a stair step low, I could bring my stop underneath there. It's a bit too close at the moment. But yeah, it's all practice. It's all practice. Do it in Sim. and then do it. That'll build your confidence, because I was like confident that I saw the setup. I wasn't confident based on it's not my session, but again, 70 ticks is fine for me. It wasn't a swing trigger, it was more just like a trigger on the daily chart. So I knew that it would do something, but obviously daily it's even more like a, say, a 60-minute swing trigger, even if it is small, probably. So yeah, now I need to learn how to manage my target and my trailing stop, and how can I exit with regard to. So I thought that this is quite an interesting way. So now that worst case scenario, I'm getting out at my normal 80 tick target, and see if I can just sit in there. I mean, imagine getting in a nice move and just, holding it there for, God, I'd sit here for the day doing this. I don't like sitting at the computer, but if I was able to really scale it properly, yeah, anyway, let's see about that. So back to what I was talking about, Trader 5. I do apologize to Trader 5s from last cohort. They rejoined TradeWatch last week, and I do apologize. I didn't have your email address in the email group. So you didn't get the information that I said to you last week, but welcome back. I think, so I just wanted to say other markets. So your stats are great. You've got some good information here. I just want to say other market. I think it's got FDAX in there. I know it doesn't have the smaller contracts. I've just done as the market overall. So you can just pop that in there if that works rather than other. I mean, I can go put them in there, but I'll need to go back through every single person's charts and do it individually. Unless I just I can go and put that in yours, but whatever. Otherwise, I just have it as like either the NASDAQ or the FDAX as the main sort of market name, whether you're doing the micro or the standard contract, because then you don't have to, I mean, that doesn't really matter to me. It's just more which market you're doing. I mean, I can always obviously check the charts. So I also wanted to mention for you, if you don't mind, you can go into this spreadsheet view now. You should have that link that was sent to you. If not, please let me know. So you guys can access the sheets like this. I just needed to make sure that for your negative columns, like your initial risk, that everything had a minus. Maybe you've already gone and done that, I'm not sure. But I can't remember what it was. There was some that had a positive figure there. So maybe just double check everything, and you can use these cells and go in and obviously edit if you need to. I can't find where it was at. We've got so much data in here now, which is great. But obviously we need to make sure like the losses always have a negative figure in there. Same with your initial risk, always have a negative figure. Your reduced risk, that's maybe it, reduced risk. I don't think you got to plus 20. I'm sure it would be minus 20. So they would need to be updated. And then also double check your MAE. I'm sure that looks fine. Great. So that's looking good. So that's important. But otherwise your records are looking good, because what we're going to do soon, you're going to be able to access the tab which says for your reports. But we need to make sure everyone's, each individual person's data is correct first. I didn't make a note here last week that this person was taking some trades that weren't to plan, but I think that was a while back. Yeah, that was probably the week before. They haven't done that this week or the more recently, so that's fantastic. And then I noticed that sometimes when the PVI is large, maybe if you're feeling it's not that great, well, what a great trade there, 123 ticks, congratulations on that. Maybe that you just don't take the trades, or you adjust accordingly your targets, like you drop your contracts, and I do that sometimes. I'll just drop my contracts, double out my risk, and double out my targets, but then I just halve it so that's relative to my trading method. But otherwise, great work, really nice, good trading. that was my notes from last week. But otherwise, this week looked like you had a fantastic week with a tiny little loss. Well done. Okay, let's have a little look at where this trade's going. Nearly up near $4,000, looking good. Okay, on to trader 10. So this trade is trader 10. Trader 10 is from the original cohort as well. I just wanted to mention trader 10 that importantly, you might like to go to the new sheets like this. This sheet is that you're just reporting on per session. Each row is per session. Whereas the other traders, they're reporting on each individual trade. So you might like to, if you'd like, I can send you a link for that, and I might send you an email. If I forget to send you an email, please contact me, obviously, because it's going into holiday period now. But I can send you a different link so that you have a spreadsheet view because obviously this is each trading session rather than each trade. But you've been trading extremely well, doing quite nicely, but I can't provide the intel because I don't have as much information as what the other traders providing, particularly with the MAE, the MFE, the time and trade, and all those little bits and pieces. So the new cohorts have gone to a different, more personalized entry form. Where they're able to provide more detail, and again, they're going to be able to have an individualized report where you can't. But I just want to say that you're trading very well. I mean, you are taking a lot of trades though at times, and I just want to be, which can't be seen here. Let me just see if you can obviously see it in here. So you are taking a lot of trades, and again, everyone trades differently. So I'm not saying that you need to change particularly anything, but you just got to remember, and I think it is good learning for other people or other traders, that, you know, it is all about focus. And when you are in the market constantly, you have to make constant, rapid decisions, and that adds a lot of pressure onto yourself. So when you're taking a lot of trades, you have to be constantly, I mean, sure, you, even when you're outside of the market, you constantly, or even when you're in a larger trade, like now, I still need to obviously be making constant decisions, but it's a lot less pressure than it is where you're in and out, what's happening next, and like, you're still doing that, but it's not that emotional pressure. So I just wanted to make that mention. I mean, again, I do recognize that everyone's different. Some people like taking a lot more trades, but sometimes is that necessarily better? Like, if you're good at picking the direction, could have you got the whole move rather than a lot of little bits? And we're obviously paying a lot more commissions and fees than just taking that one good trade. So remember, we've got to think about what's necessary as well. So we're looking at now trader 13 from the last cohort, where each of these rows again is similar, where it is per session rather than per trade. So you've been doing extremely well. You did have a bad session there where you kind of took off a lot of ticks there. You also too have a lot of high activity. I see that you are taking some of your trades that are outside your current trading plan, which is the VCAT, which is fine, but also too, I don't want you to do it based on FOMO and feeling that you need to be constantly in the market. I understand too that you did have an issue with your stop loss as well. But remember, like, maybe think about that one good trade, because I know that you can analyze the market very well. And it's a point that I've sort of brought up a couple of times previously with regard to it. It's not about removing trades in the effect that it's just those first 1 or 2 trades of your session, going back through your statistics. But what about if you really honed your focus into that one good trade and what that sitting there and waiting for that really, really good setup where your risk to reward is much better scenario. So something to think about, where you qualify your trades better. So it's not just your first 1 to 3 trades that you've ever done. It's what about qualifying? So it's the quality over quantity. And I feel there's a lot of detail on your charts as well, lots and lots of detail. Could you reduce that clutter? They're very busy. You almost can't see your candles there. Not sure you need that many deltas during that high volatility time. Again, something to think about, and also for other traders to reflect upon and think about for themselves. Can you see, is this necessary, all this stuff on your charts? Try it without. Try just having that clear space. But otherwise, you know, certainly getting there. I do love seeing your progress. And I do believe that you had an issue with your stop loss on that during that session. So you did mention there that Ninja had different results. I'm not really sure why there was different results on Ninja to your calculations. But otherwise, you know, you're certainly refining, and it takes time. You know, it's not an instant. As you sort of settle into what you've been doing, settling into your new signal and your new session, etc. It takes time, and you're going to have these bumps in the road every now and then. But just work through it. So well done. You've been doing well. Okay, so on to trader 14. So this trader loved the focus, the commitment, the routine, and the structure. Has been great, been excellent. There's been, you know, obviously you need to kind of get your details, making sure you're a little bit more consistent there with regard to making sure everything is hunky-dory. You can delete those rows out if they were errors. I believe this is probably just either a no trade day, but you can identify that. You could just type in your notes, no trade day. I'll just double check. You may probably did that. Either you did. Sorry, apologies. So no trades met your trading plans. So that's fantastic. It was in my notes. I was wondering what I was talking about there. Let's see. I really would love to see you doing your MAE and your MFE, because I can really, it'll help me to MAE, MFE. If you need to chat about that, please message me if you need help along those lines, because it really provides insight into you getting more out of your trades. Precisely with all like what's going on at the moment. Let's have a look at that trade. It's looking lovely. Look at that, 4.5 grand nearly. So as we've come up, I'm going to bring, if that candle closes, but I'm going to bring my stop loss up under there, under that failure point. Okay. Whoops, wrong one. That's fine. I'll just leave it there. The trade's behind. But yeah, so even though this feels good, getting 55555, you know, you're pretty much wiping it out when you do have a loss. So it's good to see that you've increased your target a little bit more recently, and just do it in a gradual, just build those confidence. But as I said, if I could see the MFE for each of your trades, I'd be able to help you with that on how far are the trades you're selecting going anyway. So it tells you so much information by having this. So please, if you can, Let me know if you don't want to. I don't want to hassle people when you don't want to do something, but I can certainly help you a lot more when I understand how far are your trades going anyway. And you will see, you'll see this information is just like gold. And that's exactly how I started making those decisions since September. That's September, October, November, December now. It's enabled me to rework my targeting and have a positive risk to reward based on that information. Nothing else. You can't remember it otherwise. You have no idea what's going on. You're running blind. So again, I'm going to just keep highlighting it. But otherwise, you're picking your winners well. That's the thing. Your timing's good, but you want to make sure, because look, if I change this to sum, so 117 to 152, so you'll be going backwards. You need to get more out of your profitable trade. So let's see how we can do that together. More than happy to help. Really, really important, because you can look at, what's your average. I mean, that's why all the metrics are so important. So you're building that up to an average of nearly 6 ticks with an average loss of minus 25. So what the thing is, the activity, you got to remember, the thing is, you want to make this worthwhile. You really, really want to make it so worthwhile what you're doing. So how can you do that? All right. So, but otherwise, lovely record keeping. You got you're really sitting there you're picking your good trades. Just got to get as much as you can out of that, so we don't give it back. Or from your MAE, we can tell if. And look, I know you got that interruption and we spoke about that last week, so I get it. That sort of really helped you give it back a bit. That happens. So I'm not to say that this is your typical losing style, because you do minimize where you can. But, that's the thing is and I just did the same thing recently when, I gave back so much. I had some trading areas here and things that I just shouldn't have probably done. And because I didn't get the optimum out of my profitable trades, that when I did go through that crappy time, it kind of catapulted the other way. So yeah, we really want to make sure when your trading's going well, you're not leaving heaps on the table. So that's another thing I wanted to talk about too. When Lockie is talking about, your average of 10 ticks a day. That's the average. Okay, so you really need to make sure that your 10 ticks is the average, not just that you're getting 10 ticks today, 10 ticks tomorrow, 10 ticks for the first 4 days of the week, and then on Friday you give it all back when you have your 40 tick stop loss or 50 tick, and then now you're in the negative. So you need to have what's your average? How can you if you want an average of 10 ticks a day, you need to work that out in the grander scale, and you need to probably go for at least 15 ticks each time as a minimum target, so that when you do have a loss, you're not intruding and giving it all back, but it balances out to an average of 10 a day. Oh yes, so as well, please, for that trader 14, I need your charts as well. I can't see anything. Sorry, you've got your charts. No, sorry, your videos. With the Trade Watch, you guys, if you can video your trading session, because you'll find a good deal of learning out of that. Look, again, you don't have to. I can't force you to do that. Again, that's fine. Let me know if you need help with that. But it is interesting. It really helps with your discipline, knowing that someone is watching what you're doing. Sure, it's going to be nerve-wracking at the beginning, and it does take a little bit to settle into that. But there's so many positives that come out of these learning times as well, and these more challenging times. It helps you to stretch yourself as well as a trader. So don't forget that if you would like to. If you don't. Okay, so next, is this trade going? 42. we did close an ABC. We're going to, efficient candle delta outside the range. So I like to have a look at these particular, there's my target up there. I want to stretch it out even further just for the fun. That's just for the fun of it. Let's just see how this trade can go. So obviously with that, I like to see these signals set up, because now I can look at it as a brand new trade, for example. Not that I'm wanting to get into it. I mean, I could if I wanted to scale in, and that's something I'll practice later. But at the moment, I just want to see that, okay, well, there's an entry. We should sort of continue on then, and that my stop should be safe here. And I'll just keep it out of the way. I mean, I haven't looked for any particular larger chart stuff. I mean, I've got a 4-hour 50 up there where my target is, but yeah, all very interesting. Anyway, that would have been a really good trade, but you know, you got to build your confidence around this first and understand what's my actions going to be. So anyway, we're going to trader 17. We'll get the information up. The trader 17, same sort of scenario. Trader 17. So I've got here similar scenario, fantastic, great trades that you've been taking. You just don't want to give it back when you do have some losses. I mean, I think you've had a wonderful week from the 13th. We're sort of looking on 100%. Well done. But again, you know what I mean? You've got looking at your sum here. You're obviously still ahead. Well done. But are you getting the most you can? And it's great to see that you've stretching out your target, build that confidence. Don't go too fast, too quick. I had someone in the Asia session who was finding that they stretch out their targets, and because when you stretch out your targets, you've got to understand that you're going to have more losses now. Unless you start looking at those larger chart pictures or those larger chart moves where you sit out and you wait for that one good trade rather than being in it all the time. Like for me, I now know that it's just no point getting in on a trade that it's against the larger chart move. Or I would just go for my smaller targets like 11 ticks. But if you're going for larger targets, you might want to check that, you know, those trades are with the larger chart direction. So now, so I think congratulations, you've virtually doubled out your profit. If you think about it, you've added 100% onto your win. So well done. That's looking nice. But just remember, as you extend out your target, you might experience more losses. But remember, maybe be a little bit more selective around what trades you take, and that should assist with that. Good to see that you're reducing your risk as well. Let's have a look here along the way. So you are actively reducing your risk from your initial risk of 30 to 40, and you're reducing that. Excellent. That should be a negative figure. Make sure you go in there and make sure those in through the back end. Unless you happen to go, no, you wouldn't have gone to plus 20 if you've got out 11. That doesn't make sense. So that, look, I'll just correct that while I'm here, but you guys can go in and do that when you're in that back end view. And I think that even when you're losing day, I think it's fine. Okay. But otherwise, well done. Excellent, excellent, excellent. Trader 17, nice work. So now we're going on to Trader 18. So Trader 18 has got fantastic records, really nice, clean and clear charts. Make sure you got your markups on there. I think some of them didn't have your markups though, which for me to be able to see. You got your recordings, fantastic. So some of them I didn't see markups on there, like, you know, with the actual chart markup. And just for anyone else, I'm just going to quickly show you here what that means. So that when I'm saying the chart markup, it's so I can see always where the trade entered with the little blue arrow there. How to get that, for anyone that doesn't know, go to your data series and then go plot executions, markers only. So if you can, people can just leave those on their charts. It's just a lot easier for me to quickly see where you got in and out based on your chart. Okay, so on the 17th of December, yeah, you had these losses here. You had a bit of a bad run on a day. Maybe you had a similar run on the 8th of December. You had just a bad trading day. I think there was something with it though. I don't know why I don't have a note there, but maybe it's in your notes. But look, and obviously sometimes when the market's running as well, if you're reversing the market and it's in a fairly strong moving market, it can be a little bit high. So I've just made a note here. You are reducing your risk quick, which is great, but a couple of those got in the way. And that might be what maybe you got, you were reducing your risk too quickly because they would have gone to target. So I can see with these trades here, that one would have stayed as a loss. Depends on where, you know, it depends on what sort of target you're using, but I'm assuming you're using larger ones. This got in the way, or this one got in the way. And this one you save. So, but look, that's the way the cookie crumbles. I find too that I want my risk smaller and I do get in the way sometimes. And as you've got here, that seemed to be a very high PVI day. So, but otherwise, you're doing really, really well, really well. See that you're starting to increase your targeting. Again, try and think about those larger chart moves or you know, so that obviously that complements. Or say for me, I'm looking to go with the larger chart move. If you're reversing the market, you might want to make sure there isn't a larger chart momentum move happening that will kind of like interrupt your reversal of the market. Because obviously there's only so much you can get out of a market that's strongly trending. So good, well done trade 18. Let's see if we can get up there. So again, we don't want to give too much back. Let's see how we can keep up the sum of both columns as well. I mean, obviously you're ahead, but we want to make sure you're not giving money as much back each time. Okay. So trader 20. Doing very well. He had a really nice trade here. So let's have a look at your sum. So you've been doing really well. You haven't been giving much back when you've been having a loss, which is obvious. So you can see this trader really well, picking up the ticks, banking it, not giving much back when you do. Down all the way down the bottom of the screen now. Oh, I want it that big. Can't, what's happening? Okay. It's gone off screen too much. Okay, so otherwise I can't scroll to the right. Okay, so and even it seems that was a trader error anyway, possibly that loss. So nice work. Your timing's really good. You're picking up some nice trades. I was identifying your trades in the market. If there's some negatives, if you don't mind to come into the back end here, and the initial risk, they should all be negatives. So please, trader 20, if you could pop into the back end and do that. Even your reduced risk, they need to be negative unless you kind of moved your stop loss to plus territory, like with what I've got in my current trade that's open. So well done. Well done, well done, well done. Great trading. Shows by your results. Good job. Okay, so on to trader 21. Now, obviously, I'm going to probably think about getting out soon of that trade that I'm in, because I just realized we're probably getting towards the end of the session. Let me just have a quick look at that. So what I could do is actually come up by each candle low. I'm just thinking that, when does the US close finish? I can't remember now. It must be a little while away. Okay, maybe I'll just bring it back to see how we go, just for the fun of it. I thought for some reason it was the time at daylight saving has all changed now, hasn't it? We did close not another ABC there yet. No. So our leg is currently from this pattern up. I don't have a lower low yet. We do almost now. I'm going to be able to, if we get another ABC pattern, bring it up underneath there. Okay, so trader 21, great, good job on your recording of your data. You see that you're picking up some bigger trades. You've got a -80 there. Not sure what this one is here. Oh no, that was an error. Sorry, that was a technical error. We can ignore that. So I've got there. Yeah, good to see that you're increasing your target, but just remember, we want to make sure we qualify those trades well. So you had a few days in not trading. Yeah, so you are, that's right, you are looking at it. You've got a new tactic, I suppose. You have reduced contracts back. You're changing, because I think your ATM regularly gets in the way. You are trading very specialized candle. So that's good. Like I completely agree. I feel like I can see how your ATM would kind of really interfere sometimes with some trades. So it is testing, great, and good to see that you're going to do it in sim. You are very specialized in what you do. I love your focus and your commitment to one thing, and and working it out. It is, I mean, I feel like people have seen me in the LTR ever since the Asia LTR started. I've just been constantly tweaking. So, don't feel that when changing things isn't an issue, as long as you make changes. And I do want to highlight that, and I will go back to the chart here, is I want people to realize that I didn't make these decisions here based upon, that's a one CORPC seller candle. That one then was just on the edge over here. So we could have had enough of going up, or at least have a fairly big retracement. Let's see if I can come closer to the market, but not too close. Yeah, worst case scenario, what would I be out at here? As 200 ticks target. So that's pretty good. So I'll see if I can still trail it nicely without getting in the way. But you've got to remember too, the further you push away from the MDI, it's got to come back sooner or later. So we'll see how we go. But if I get a higher high, because we've had this lower low, so I'm looking at, have the sellers shown, we've got an ABC to the high side. If we get back above the breach, I'll bring it under this low point here. So anyway, yeah, it's, becoming, the only make changes when your statistics allow. So you don't just jumping around like a jack in a box. You are consciously making changes, and that's exactly why what I've done with my own trading plan of going for larger targets, same risk, and now I just need to work out how do I exit when I can, because I know the market will move a certain distance relatively well. So anyway, traders, well done everybody. It's been a fantastic year of lots of learning, and I really have enjoyed my time with everyone. I hope everyone really, particularly for the trader VA people, I hope you guys see the detail, the commitment, the consistency that these TradeWatch people are doing. And I want you all to please particularly embrace the new year, get going on your trading, because it's certainly worth it. As you can see, I'm sure I've been in this trade for not that long. I only had since when there is back down here for say an hour and a half. I don't think many people have made $4.5 grand in an hour and a half. Obviously the trade's not closed out yet, but I'm looking pretty much thinking I'll be able to bring my stop up here soon. But you know what I mean? It's well worth doing what you need to do, not what you feel like doing. And that's the thing. Most traders are doing what they feel like doing, and they're results focused rather than process focused. All I'm doing here is trading a process. Okay. I'm not really worried. I don't usually have dollars on to the dollars on the thing there, because I don't really want to look at it in that way, but I just happen to have that since yesterday on there. So, and it's all obviously very interesting. I'm trading this in sim, so it's not as emotional, but what a great way to make $5 grand. But it's based on a process, not anything else. Way more relaxing in sim. But anyway, traders, I'm here to help. I want you guys to all be the best traders that you can be. And the only way I can help you is by being able to see your perception of the market or how you're trading. And the only way I can do that is you fill out your trading statistics. So let's go into the new year being the best traders. Keep it simple. Commit to doing what you need to do, which is, keeping all your records. And it's nothing, it's not a huge amount of records. Keep it simple with your trades. Don't overtrade. Just so that you have that clarity in your focus. And let's aim for that one good trade. That's going to be my motto going into the new year. One good trade. All right, guys. Love you and leave you. Have a safe Christmas. And let's see how this trade goes. Looking like it's doing the right thing. So I'm just bring up my stop now anyway. Lock some profit in, and I'll let you guys know how this trade ends up going, seeing as might be sitting here for a little while, but as I realized that the US close got a little bit more time to go, so it might be a little bit more profit into the kitty. If I walked away with $5 grand in sim, I'd be pretty happy. All right, guys, take care. Bye for now.